Thanks for joining us. I don't know how much you heard of Gene Sperling, but what was the message you just gave to him as he headed off this? What's the House Democrats' message to the administration as they go into these conversations?
I did catch a lot of...
did you say play hardball?
No, I did not. But what I said was I thought that he laid it out well. In fact, Gene and I are very much on the same page on these issues, as with the president. So, look, the challenge is pretty clear. Number one, we've got to focus on accelerating the economy and job growth. That means avoiding the fiscal cliff. It means extending the middle income tax cuts. We should actually talk about the payroll tax component of that, which is actually a significant part of the fiscal cliff that has not really been a part of the conversation. I personally believe we should look at a one-year extension of either that or some other mechanism that delivers the same economic benefit.
$95 billion, the price tag for that, at least it was for this past year. Is that something the country can afford when the goal here is to bring the deficit down?
Well, the goal is twofold, right? The goal is to make sure we do nothing to harm a fragile economic recovery, because that actually would be the worst thing from the deficit perspective in the short term, and then to lock in, absolutely, a long-term path to credible, stable deficit reduction. So we're trying to accomplish two things at once and make sure that we don't do anything in the short term to place a drag on the economy. In fact, we should be taking measures to try and boost a fragile economy.
How much latitude does the president have right now to go in there in terms of these negotiations? He's getting pressure from Democrats. He's certainly getting pressure from Republicans. But within the Democratic Party, within the congressional leadership, does he have a free hand to talk about painful things, difficult things, like, for example, scaling back Medicare in certain ways to generate savings there?
Well, first of all, I mean, the president, I think, has the confidence of the Democratic caucus in the House and the Senate. That doesn't mean there's a blank check, obviously. Everyone's going to want to make sure they represent their constituents in the best way. But I think there's a consensus that the president has laid out the challenge clearly, and the president's also pointed out that the approach that he has taken in his budget, and Gene mentioned the president's budget proposal, was not some secret during the campaign. The president was the one person who was absolutely transparent about how he would approach these issues and laid out a very clear revenue plan, both in terms of allowing the top rate for high-income individuals to return to Clinton-era levels. And, as Gene said, he actually had a tax reform component that actually lowered the value of deductions, frankly, in a pretty clean way by dropping the value of deductions from 35% to 28%. So he's actually put a plan on the table. We've not really heard a plan from our Republican colleagues. We heard a good tone from Speaker Boehner, but we haven't really seen any particular plan. With respect to the other issues, the approach we believe we should take to health care and Medicare is to contain costs in the overall health care system. The reality is that the per capita increase in costs in the private health care system has actually run slightly higher than in the Medicare system. So simply transferring costs onto individuals does not address the fundamental problem. Building on the kind of reforms we took in the Affordable Care Act, which is to move away from a strict fee-for-service system in Medicare, is the better way to go.
Let me run a couple of ideas past you that have been floating around the Hill that I couldn't necessarily get Gene to bite on entirely, but let's see if maybe you will. Raising that trigger in terms of the trigger for higher taxes for those earning $1 million a year, or maybe even $500,000 a year. How will that play? What do you think about that idea as a means to try and win more Republican support for that, find a middle ground, and how will that play in the House Democratic caucus?
Well, look, I think people will consider various options. However, the fundamental issue is, as we said at the beginning, make sure we boost job growth, but also make sure we put us on a path to long-term sustainable deficit reduction. So the issue is, what is the revenue to cut mix? And if you look at the Simpson-Bowles plan, for example, if you look at all the overall framework and you look at the revenue component of how they get to their deficit reduction numbers, the reality is the Simpson-Bowles revenue is more than what the president has put on the table, even at the president's $1.6 trillion number. It's really important that everybody recognize that. So if our goal is deficit reduction over the long term, which it should be in the long-term goal, and what we got to decide up front is how are we going to get the revenue and how are we going to get the cuts. And so the issue with going to $1 million threshold is obviously that means less revenue coming in over the next 10 years to try and hit that target. So where are you going to make up that revenue? You're going to have to find it somewhere else if you're going to take that balanced approach to long-term deficit reduction.
$1.6 trillion, the target in the president's budget in terms of revenue. Is that a target that you think is the right target in terms of the revenue mix?
I do. I think that is the right target. I just, again, emphasize the fact that the Simpson-Bowles framework, and I think they have a good framework in the sense that I think they've got the right ratio of cuts to revenue, recognizing that their revenue estimate included is this in their starting point, in their foundation, the amount of revenue you would receive if the rate on top earners went back to Clinton-era levels. It's really important that people understand that that was the starting point for the Simpson-Bowles calculation. That's why they get the deficit reduction numbers that they do. If you actually were to take out that assumption, they're about $1 trillion short on their own deficit target. So it's a very important piece of their plan. And the president's proposal actually comes in a little bit less on revenue than Simpson-Bowles. So look, I think $1.6 trillion is a good target, a little bit less than Simpson-Bowles. But I think if you look at his overall plan, the president's, it has that balance.
There have been some Democrats who've suggested maybe your leverage, the president's negotiating position, would actually be enhanced if we went over the cliff. What do you think of that?
Well, I don't think we want to go over the cliff. We're trying to avoid going over the cliff. The real issue is whether our Republican colleagues are willing to make those tough decisions before January 1st, or whether they'll only face those decisions after January 1st. The president has laid out a very clear plan, not just since the election, but before the election, for how to get there. So when I say that Speaker Boehner has set the right tone, but the jury's still out on the substance of his proposal, let's see the substance. The president's been transparent. Let's see what the speaker's proposing. Because if it doesn't hit those targets, then we're not going to be able to accomplish our goal of long-term deficit reduction with an appropriate revenue component. And it would be really bad if we just kick the can down the road here again. So between what happens in the next 6 weeks and what happens over the following 6 months in a structured way, we have to lock in some assurances that we're going to accomplish those dual goals: job growth and a sustainable, credible path to long-term deficit reduction.
What role are markets playing in this conversation right now? We've seen what's happened in the stock market. We've followed it at Bloomberg closely. Obviously, there's some investors out there. Maybe it's not all entirely tied to the fiscal cliff, maybe situation in Europe, but there's some investors out there nervous.
Well, as you say, there are lots of factors that go into the nervousness and the stock market ratings. And of course, there are these sort of twin objectives, both weighing on people's minds, right? One is people don't want too much deficit reduction right now because it would have a negative impact on the economy. After all, if we go over the fiscal cliff, we should be clear, if we go over the fiscal cliff just from a numbers point of view, and I'm obviously not advocating it, when you look at the Congressional Budget Office 10 years out, you've actually got your deficit to GDP ratio down below 1%. The Peterson Institute has that chart on their website. So just mathematically, obviously, and from long-term deficit reduction, that would be the way to go. But it would obviously have a very detrimental impact right now on the economy. It would be a major drag on the economy. So the trick is to accomplish both these objectives. One is to prevent the drag on the economy, in fact, do some things to help accelerate economic growth. And the president's jobs plan, including a major investment in infrastructure, should be part of that, in my view. Whether that's part of the 6-week discussion or immediately beyond is something we can talk about. But then we've got to do this piece. And what that chart illustrates is that there is an important revenue component to this. After all, if you do nothing and go over the fiscal cliff, you're talking about $5 trillion approximately in revenue over the next 10 years. So the president's 1.6 trillion, that looks pretty reasonable in perspective. Let me just say that again. If you go over the fiscal cliff, you get about $5 trillion in revenue over 10 years. The president's saying, let's do about 1.6 trillion over the next 10 years. It's a very reasonable proposal. Again, less revenue than in Simpson-Bowles.
If you go over the fiscal cliff, you also get another roughly $600 billion in savings from the Pentagon, military spending. What is your own view about whether or not this country, this government should be prepared to go beyond the $487 billion that the president initially targeted in terms of reductions in defense spending and go further, something closer to that $600 billion figure?
Well, I do think that there are additional savings to be made in defense spending. As you indicated, we did $487 billion in reductions as part of the original Budget Control Act. And it's important to be clear that those reductions were reductions from projected increases. Okay? It wasn't a reduction from the baseline. If you go off the fiscal cliff, it's about another $500 billion. Simpson-Bowles essentially had as much savings in defense as if you went over the fiscal cliff. They have another $500 billion in Simpson-Bowles. So it's also important to understand that was part of the Simpson-Bowles framework. Two things. First of all, the sequester is just an irresponsible way to deal with cuts, whether it's defense or non-defense, because it's this across-the-board buzzsaw effect. So you don't want to do that. In terms of the magnitude of the defense savings, I think that $500 billion cuts over 10 years is excessive. However, I do think there are additional savings to be made in defense. Senator Levin, the chairman of the Senate Armed Services Committee, has said another $100 billion. Other people have made very good arguments for how you could do a little bit more. The key is to, we should not have the budget decisions driving these decisions exclusively, or that should not be the main component. The main issue, what's our military strategy? And the reality is that we're doing lots of things in the military that are still looking toward the Cold War strategy. We need to focus on what our strategy is for this century and align our resources that way.
You played Paul Ryan during the vice presidential debates. You perhaps know the Paul Ryan budget plan almost as well as Paul Ryan. I don't want to go too far here, but I know you know it well. What can you say about that plan, knowing you were critical of it, you've opposed it? What do you see in that plan that could be the basis for middle ground, even between yourself and Paul Ryan moving forward? He's going to be part of these negotiations. Certainly, you're going to be part of these negotiations. Is there anything in that plan that you think could be the seed for some sort of compromise? Any area in there that you would be willing to sit down and negotiate with the Republicans?
Well, there's very little overlap between the Democratic budget and the House Republican budget. There are some areas of common ground. For example, we all believe that there are savings to be made in terms of rolling back many of the excessive agricultural subsidies. That's a part of his budget. It's part of ours. Get rid of some of these direct payments. We should be able to agree on those issues fairly quickly. And there are some other items. But you raise a very interesting point, and it's a point I want to emphasize, which is the term common ground is used a lot. What we need here is not, it'd be great to find more common ground, but compromise is also going to be required. Compromise means not just identifying areas everybody agrees on. Compromise means you have to accept some things you don't like, and in exchange for moving forward and accomplishing a national objective. And compromise has been in short supply in many parts of Capitol Hill, and so hopefully this action-forcing event will allow us to move forward. But it needs to be moved forward in the context, as Gene indicated, of an understanding that these issues were central to the campaign, last presidential campaign. There are some issues that were on the sidelines. This was not one of them. In the debates, fiscal issues, budget issues, tax policy issues were all debated.
The president has a mandate, in your view.
On this set of issues, there is no doubt that when it comes to asking higher income individuals to contribute more to deficit reduction so we don't have to whack the other parts of the budget as hard as you otherwise would, that he has a mandate. And it's not only that he was elected, you also see all the exit polls that indicate a majority of Americans support that idea, a majority. You got at least 50% of voters who believe we should ask higher income individuals to contribute more, and then you've got a good chunk of Americans who say that we should raise revenue generally. That's in the exit poll. So again, it's important to understand that I think everybody, well, not everybody, but the President, myself, others believe that the balanced approach that's been laid out, both in Simpson Bowles, Rivlin Domenici, and other bipartisan groups, entirely rejected that framework. I mean, they have said that Simpson Bowles' framework is not the way to go because of the revenue piece of it.
Really quickly, we're out of time, but do you sense something different this time around? You were on the super committee. I saw your frustration when there was no deal coming out of that. Is there something tangibly different now, do you think?
Well, there are two things that are different, I think. One is, and I don't think it's a secret because a lot of them made this point in their statements, there were a lot of folks in Congress on the Republican side who were focused leading up to the election simply on trying to defeat the president. And it was difficult to get any kind of cooperation. So the president's been reelected, term limited. Hopefully that won't be an objective. But I put less stock in that than I do in the structure of the situation, because while the fiscal cliff contains great potential risks, it also is an action-forcing event that creates opportunity. It's a very combustible mix of issues. And what we don't want is for it to all blow up in our face. But it also presents an opportunity. And the president has laid out the challenge on the revenue side. And I think it's important that people listen carefully to what he said, because we do want to avoid going over the fiscal cliff. But what he has said is that he will insist, as he stated throughout the campaign, that higher income individuals contribute more toward reducing the deficit. And it's, let's think about if we were to go into January 1st, January 2nd, and all these things reset. And the president goes on national television every day and says, to the American people, I'm trying to provide, tax relief to 98% of the American people. In fact, 100%. 100% of the American people will get tax relief on their first $250,000 in income. But our Republican colleagues are saying, nope, nobody gets any tax relief unless higher income individuals get a bonus tax break on the income above $250,000, because that is the position they would be taking. And I just ask you, I think that it's the wrong policy, but I think it's politically unsustainable. And so I really hope our Republican colleagues will recognize that that's unsustainable between now and the end of this year, and not put that proposition to the test starting January 1st of next year.
The good news is we have one of your Republican colleagues waiting in the wings
to
talk about some of these very same issues. So, Chris Van Hollen, thanks for joining us here at this Peterson Foundation event. And good to see you. Best of luck to you in the negotiations to come.